Hi, everyone. Today, let's talk about, is it a bear market rally or is it a new bull market? This is the question that a lot of people are asking because if you knew the answer, you would probably be rich. So we'll talk a little bit about how a bear market is defined. We'll talk about what some global fund managers are saying about the rally. And then we'll talk about how the 2020 market is a little bit different from some of the bear markets in the past. Is it time to invest? If you have big dreams like buying the Bugatti Chiron Pure Sport, go ahead and like and subscribe. Only 60 of them will be made. They have 1,500 horsepower and a top speed of 218 miles per hour. And they are set to start at $3.6 million. Keep your dreams in the front of your mind. Like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So is it a bear rally or a new bull market? It says here this becomes a question because the S&P 500 dropped more than 20%, making it a bear market. It went all the way down to 35% in just over 5 weeks. And then it immediately set a record rebound up to 15% from the highs. Goes on to say that the term bear market has covered everything from the 1987 crash to the 1962 crash and the grinding of the 1970s and early 2000s. So to clarify, this became a bear market when we dropped 20% from the highs. However, we immediately rebounded back to 15% from the highs. So at that point, is it still a bear market? How do we treat this market? Is it just a slight correction? Is it a recession? Depression? Well, I think it's clear that the answer is not quite so simple. If it was as easy as saying the market has gone down 20%, therefore we are in a bear market, I wouldn't need to make this video. But the fact remains we did go down 20%, and that theoretically puts us into a bear market circumstance. But it's because of this black swan event that's now depressing the economy. Prior to this situation, the economy was pretty strong. We did have a few dips like 2011, 2016, and 2018, but we very quickly recovered from those and continued this bull run. This bull run is now the longest bull run in history, so are we due for a bear market? Is it necessary? Is it required? The S&P 500 has averaged a pullback every 7 years for a century at this point. And in this case, we haven't had one for 11 years. So I think that's why there's so much fear and confusion in the market right now. You could say that it was fairly expected that we were going to get some kind of retraction since it's been so long since the last pullback. But also, we don't understand exactly how this cough situation is going to affect the markets long term. In my opinion, the cough situation exacerbated the fact that we hadn't had a retraction in 11 years, and that's why the drop was so dramatic. There was kind of a compounding effect there. But then we immediately bounced 20% from the lows, and now we're less than 15% from the highs. So is this officially a pullback? Is it still a bear market? Is this just cough driven? Or is it something that's going to be short term? Let's keep going. Here you can see the graph from October to current. We made highs around 19 February. It had a 34 to 35% drop, which bottomed out on March 23rd. And since then, we've had quite the recovery. Right now, we're sitting just below that 200 moving average. And it's not depicted here, but we are right above the 50 moving average. So the S&P 500 is actually getting trapped between those two moving averages right now. If I had to guess, I would say the 200 moving average is going to win. But also, this is not a normal time. In my opinion, it's a cough-driven event. And we also have the Fed injecting liquidity into the markets in a way we've never seen before. So if they continue to support the market, can we just bounce back and forth and slowly trickle over this 200 moving average without getting another massive decline? It seems possible. Only time will tell. But in the history of the S&P 500, the 200 moving average usually wins. But again, the market hasn't had the same kind of Fed backing the way it does right now. Goes on to state that Ned Davis Research identifies a bear market as a 30% drop after 50 days, or a much slower 13% drop over 145 days, which would include the 2016 dip. Another method is a 10% decline from peak levels. Then LPL Financial says this is the longest time the S&P 500 has been 10% below the highs since the bull market started. So really, they're just arguing semantics at this point. How do you want to define it? I don't really think this stuff matters that much. Just understanding the fact that we did dip into a bear market by pretty much all definitions at one point, and we are still in a bear market by some definitions currently. The real question is this downturn going to be any different from the others? Are we eventually going to recover? Are we going to go into an L-shaped recovery where we're flat for a long time? Is this the Japanese stock market where we peaked and we won't see those highs ever again? I don't think that that's the case. I certainly think we will retake the highs. I think it'll probably be somewhere around the end of 2021 that we will see the highs rebroken. And that's mainly because of the amount of debt we're taking on to weather the storm. There's just a massive amount of debt going into the markets right now, mostly funded by the Fed. But that leverage that's going into those balance sheets is going to weigh down these companies for quite a few years. And we definitely can't ignore the amount of interest and debt that they're going to carry into the future. Next, it says this is a matter of semantics, which is pretty much what I was saying before. Regardless of how exactly you define this, the facts are the stock market declined 35% and has currently recouped about 60 to 70% of its losses. But what does matter is if you deem this a bear market rally, that would mean you're anticipating a further drop. Whereas if you see this as the start of a bull run, that means you should basically invest as much money as you can right now, because this will probably be the last time you see prices like this for quite a while. This says the only times we've seen a rally like this have been off of decisive lows in the past, which would speak to the fact that the lows are in March. The only time that there was an exception to this was the rally off of the 2001 bottom following 9/11. And then nearly a year after that, they saw new lows. Again, we don't exactly have anything to compare this to because we haven't seen the kind of actions from the Fed in this same manner at any time in history before. We saw some quantitative easing in the last 2008 crisis, but it wasn't to this level where the Fed was willing to buy bonds of basically any company, including junk bonds. So I would say if this was a traditional recession, that we would likely retest those lows and potentially make new lows. However, the way the Fed is supporting the markets right now, I think we may retest or maybe make a higher low, but I don't think we're going to see the 50% drop that I see some analysts predicting. I think that's just overstating the amount of fear out there, which is really their job. They don't want to understate the amount of risk out there and then get blown out, because a lot of people read those documents and make decisions. So they're not going to understate the amount of risk. And because I see analysts making statements with that kind of bias, I tend to think that we have put in a firm bottom in March, and pending a resurgence of this cough situation, I don't see us retesting those lows. Of course, if there is a second wave, then I would say it's likely that we will create new lows. So to answer the question, I don't think it's either right now. I think we're kind of in a market purgatory. We're still waiting to see what happens with the cough situation. And I think we're going to have a pretty choppy market here for the next year or so. I don't think we're starting a new bull rally, and I don't think this is really a bear market. In terms of actions I'm taking right now, I'm continuing to invest in my individual retirement account. I have slowed investments into my taxable account, and I am continuing to invest in private investments, such as Lending Club and Fundrise. And with that, let's get to the jelly. So today's jelly is another classic from Buff Carell. I've been on a little bit of a Buff Carell binge during this lockdown, and I really appreciate the amount of confidence that he has in his music. And why shouldn't he? He has over 288,000 subscribers and millions of views. So here's another one of his songs.
feeling that you was being had. Don't that shit that make you mad. They just treat you like a slave. Put ropes up on your soul. They put whips up on your back. They be lying through their teeth. Hope you slip up off your path. I don't switch up, I just laugh. Put my kicks up on their chest. Unaffected by their breath. Then get busy on their ass. That's how the shots are made, man. That's how my daddy raised it. Them niggas not to go. Don't let nobody play, man. Niggas ever dream, bro. You ain't have to pay, man. Don't only put your hands when times are hard to stand. Now here's super dead. Friends that defend you. So you can get their hands up. Remember, so our plans alright. Already the show goes.
If you want to watch the full video, I will link it in the description. He truly is a great talent, and I really appreciate the fact that he uses a mirror for all of his recording. He doesn't just point the camera at himself, and also he has a sweet poster of himself right behind his head. Again, just dripping with confidence. Go ahead and comment. Let me know what you think of Buff Corel. And with that, go ahead and like and subscribe so you don't miss any of my future videos. And have a great day.